Do we have audio? All right. Okay, welcome back, everybody. Welcome back. Ed here. Ed Ponsi, your FX educator here on behalf of FX Street once again. How's it going, everybody? Hey, hope you're doing well. I finally, I tweaked the numbers a little bit. I just grabbed it at market, saw it starting to move, and I said, I am not missing out on this. And I'm kind of kicking myself. I wanted to jump in at 124.90 and I hesitated. Ended up getting it at about 125 even. Pushed the stop up just a little bit to 124.45. I did a 1-to-1 target at 125.55. That's 1-to-1, and there's a 3-to-1 target at 126.65, which is underneath resistance. Resistance is about 127, so I've got a 3-to-1 target ultimately, and a 1-to-1. So that's for the pound dollar setup. We saw this coiling up here into a very tight setup here. It looked like it wanted to break out of this tight little triangle pattern. Could be a false move. I was debating, I was kicking around, should I wait till Monday? And then I saw it starting to move because I was thinking, it's Thursday. Should I do this? Should I wait till Monday? And then I saw it starting to go, and I said, just grab it at market. So we're in for better or for worse. Now that we're in, it's probably going to go back down, right? So, well, at least we got above that little pattern here. So we'll see what happens. There was a little bit of excitement there. Jobless claims. Yeah, they have this red. First of all, 244,000 is a heck of a good number. And it's very, very close to the estimate of 241. Frankly, it shouldn't be red. It should be in line with estimates. That's so close to the estimate. I don't see how you could give it red. German GDP in line, right? And nothing else here really of much consequence. As far as upcoming, I don't really see anything that exciting coming up either. For today, some Fed speak, you pretty much know what they're going to say. They're going to say, yeah, we might raise rates next month. Yeah, 3 rate hikes sounds about right. That's all they've been saying lately. So, I'd expect more of the same. Tomorrow, nothing really of consequence unless you're trading Canadian dollar. You're going to get CPI out of Canada. And late in the day, you're going to get some, some home sales figures out of the U.S. I don't really see this being a big deal. So really nothing on the docket of all that much interest as far as economic statistics are concerned. So we'll move on from that. So here's our little trade. Hopefully it doesn't fizzle out too quickly. Not a lot of economic data out there. Again, we were avoiding, just to catch you up on this in case you missed it, this trade started during the first segment. And during the first segment, we were trying to put it together on the fly here. Just kind of saw it and decided, first of all, we had been avoiding the British pound because of the House of Lords situation. I was a little bit concerned that they might create some volatility in the pound, but in fact, the opposite happened. The Bollinger Bands got very tight, and the ATR dropped precipitously. The ATR on British pound is at its lowest point in over a year. So we said, all right, false alarm. No need to be concerned, overly concerned. So we decided to go in on British pound here. And right now, it looks like we're about breaking even on this trade, so it's not that exciting. Anyway, well, we'll see how that plays out. We've got that one going. And of course, we have our Aussie yen trade going. Aussie yen is one where we've just been raising that stop every day. And as long as, we're keeping the stop underneath the moving average by half of the ATR. So when I say the moving average, I mean the 20-day exponential moving average. So we're keeping it under the 20-day exponential moving average. And as long as the 20-day exponential doesn't break, that trade's going to keep going. We've been in that trade for close to a week now. And as long as, look, we hope we'll be in it for a very long time because we can only raise the stop. We cannot lower the stop. All right, so we've got a couple trades going. That's true for every trade. You can only tighten the stop. You can only reduce risk. You cannot increase risk, and that is one of the critical rules of risk management. Risk management, probably the most important aspect of your trading. Okay, and when I started trading, I didn't even know what risk management meant. That's how little I understood about trading, and now I know it's the most important thing. Because you could know everything about entries and exits, and you could make money trading, but you'll give it back if you don't know how to manage risk. You'll just end up giving it back, and so managing risk is absolutely critical. Okay, let's move on to greener pastures here. So, and Carlos mentioned something about Aussie yen during the first session. So I don't know if Carlos is in right now, but I never got to your comment. I apologize about that because I was very wrapped up in my British pound setup. So I apologize that I missed that, Carlos. Anyway, hopefully it'll set up. By the way, just to catch you up too on my pound dollar trade, if I'm doing that on my time frame was 4 hour on pound dollar. And if I make it to the first target, I'm going to bring my stop to break even. That's my risk management rule for this trade. So if I make it to 125.55, I'll bring my stop either up. I probably will not put my stop right at 125, but I'll put it just under, like maybe 124.95. I'm not the kind of person who's ever going to put my stop on a round number. I just don't think that's a good idea. But I might put it, 5 pips beneath a round number. I don't see anything wrong with that. Okay, but I'll never put it right on a round number. I just don't think that makes a lot of sense. The price is attracted to round numbers. I'm sure you're aware of that. So obviously it's okay to put an entry on a round number. It's okay to put a target on a round number because we want our targets to be hit and we want our entries to be hit to a lesser extent. But we definitely don't want our stops to be hit, so we're not going to put our stops on a round number. Okay, makes sense? All right, let's move on. And of course, if you do have any questions or comments, please feel free to jump in at any point. I'm more than happy to handle those. Let's remove this and move on. I'm going to move on to back to the daily. Let's get to some commodities here. I wanted to check up on gold. It's been long gold for since the holidays, and gold is having a big day. Look at this move on gold today. This is a breakout. We've had a very nice consolidation here on gold. Gold's been going sideways for about 2 weeks. So it's still inside this channel, but inside the channel, look what it did. Gold formed a triangle within the channel. You can, well, here, you don't even need this line. You can see it. You can see the triangle within this channel, and it just popped out of it today. Big, strong move. Gold is at its highest point now since November, right? So you're at a 3-month high on gold. Very strong pop. It's been consolidating its gains, but it's never moved out of this channel. And now that it's popped up out of here, I think you could see it go to 13. We've been saying for a while, right, that it could go to this area here. And that is now the upper end of this channel. It's been consolidating its gains for a while. We got in way back, caught almost the bottom on a MACD signal. MACD, moving average convergence divergence. Look at that buy signal back here. You see where this is, it gives a buy signal here. That's a bad one. That one doesn't work. That has you buying it here. That one's not going to work. And this one has you buying it here. And this one catches the bottom. So, MACD's 50-50. All right? You're going to lose here. And you're going to win here. Is it okay to be 50-50? Absolutely, right? Being 50-50 in this case is awesome. But if you see, you can't, this is why trading is hard. Okay? If you take this trade, you see where the histogram crosses here from negative to positive? This is called the zero line. This line right here is called the zero line. It crosses from negative to positive. If you take this trade and you lose, and you say, oh, MACD doesn't work, I don't like it, I don't like this, and then you don't take this trade, right? Look what you missed. So that's why it's hard, because nobody likes to lose. And you had to be tough. You had to lose and then take the next trade in order to win. Or else just be lucky and not take the first trade. Right? That's why it's hard. And but it's amazing how it caught the turn. And one of the amazing things about gold in general, forget MACD, gold has a tendency to turn. You see how this happens right near the beginning of the year? Right, I mean, gold is going down, 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 right? Look how it turns. At the very beginning of the year, gold's going down, 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 down. At the very beginning of 2016, the big turn. End of 2016, gold's going down, 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 down. The very beginning of 2017, the big turn. Why does this happen? I don't know. But I've noticed this before. This didn't just start. Beginning of 2015, gold's going up, 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 and then the big turn. Why does this happen? I don't know. But I've noticed this before. And it's not just the beginning of the year. Sometimes it's the middle of the year. You see a big turn in the price of gold. I don't know why. I don't know why, but there's something about gold and the calendar that's significant. People get emotional about gold. And maybe that's why there are strange behaviors that are attached to it. Gold can go into a bubble, whereas, people don't get emotional about copper and they don't get emotional about iron ore and silver, But they sure do get emotional about gold and, to a lesser extent, oil, right? They don't get it. They don't get emotional about nickel. They don't get emotional about copper. But they sure get emotional about this. Speaking of copper, still trying to get out of that triangle. Copper's having a rough go of it, man. Trying to get out of this triangle. False breakout here. I really thought it was going to go here. I really thought it was going to go higher. Pulled back in. Didn't make it out. And hasn't made it out yet. I thought it was going to try again here. Didn't make it out. But, what do you notice about the lows? The lows contain, as long as it keeps making higher lows, there's still a chance that this could work. I think it's got a lot to do with China too. And it's got a lot to do with these big mines in Escondida in Chile. big mines in Indonesia. So just I'm always got my eye on China economic data. I think the global economy is improving, and I think that's good news for China, and anything that's good news for China is good news for copper. So it bears watching. Okay. But it's interesting to me that gold is on the move, copper is not. Silver, big move in silver today. Also at its highest point in a while. Copper, not so much. Okay. Interesting news in stocks. Apple, look at that, just keeps going. Look at the cup and handle. The cup, the handle, and the handle. And kaboom, all-time highs. We love the cup and handle. And we love the cup and handle. Right? Look at this, HPE, Hewlett-Packard. Higher highs and higher lows. Who knew it? Hewlett-Packard Enterprise. Tesla just reported earnings. Tesla, this is a stock that I hated and I was short. And it came up, formed a double bottom, came up, I covered my short. Man, I wish I'd bought it. The thing just keeps going up. It's going to get rocked at the open today, though. It's going to come down a bit. Closed up here. It's going to open somewhere around here in about 9 minutes. It's going to come down. I have no interest in this anymore, but it's just a curiosity at this point for me. It's going to open right around here. All right. Let's see about euro pound. You might recall big head and shoulders formation. You can actually see it better on the weekly. It's so huge. Now, I'm already long the pound against the dollar. But if I were to take this trade, I would also be long the pound. I'd be long the pound against the euro. I'd be short the euro and long the pound. I don't really see that as being a problem. Here's why. This trade hasn't triggered yet. This trade triggers when it goes below 8,400. By then, this has been moving pretty slowly. By the time this trade triggers, I suspect I'll be out of my pound dollar trade. If pound dollar goes up 50 or down 60, I'm out of it at this point. So if pound dollar goes up 50 or down 60, I'll be out of that trade, and there's a chance I'll then get into this. This one looks like a lot of fun, potentially. Euro US dollar. We talked about that potential head and shoulders, inverted head and shoulders. Don't know if that's ever going to come to fruition. On the 60-minute chart, though, it could be interesting. You know, on different time frames. On this time frame, this does look a little bit bullish. I see an inverted head and shoulders here on the 60-minute. So on a very short time frame, this could be, just forget about the weekly and the daily. On the 60-minute, this could be bullish. Now, I'm already long pound dollar, meaning I'm short dollar. So I can't take this trade in addition to it. I don't want to be short the dollar times 2. But if you're not short the dollar, you could take this. This could be, here's your head and shoulder. It's not perfect, but it's there. Looks to me like if this breaks above 105.90, it could be bought. And it's projecting, if you use the measuring technique, this is about 90 pips in height. So this is projecting up to 106.80. So you could have a target as high as 106.80 on this. That would be up to around here. Call it 106.75. I like to be conservative when it comes to targets. Aim a little beneath. Besides, look, why would you aim above this? Look at that. Why would you aim above that? You wouldn't. You'd aim a little under there. 106.65 looks like a good target. Entry would be 105.90. Right here. That's a potential gain of 75. So this is for a short-term trade. I love to use more than one target. And if my potential target is 75, if this is going to be a 3-to-1 trade, that means my farthest stop could be 25. Now 25 is generally about the closest stop that I'll ever use. I know some people will use a closer stop than 25. Not me. I generally won't use a closer stop than 25. That's about as close as I'll get. 25 in this case is 105.65. And if I wanted to use two targets, I could close half when I get to 1-to-1 and then shoot for 3-to-1 with the other half. 1-to-1, right? If my stop is 25, then 1-to-1 is also 25. That's 106.15. And that's right about here. Now, there is a flaw here. When you look at this and you say, look, that stop, if you want to, if you want to look at this and say, look, Ed, that's already broken out. Okay, let's draw it up again a different way. Let's draw it up again a different way. So there's more than one way you could draw this. We could say that this is part of the head and shoulders, which is the way we've drawn it up now. Or we could say that this is not part of the head and shoulders and that the neckline is here. Let's try it that way. This is the way I prefer, by the way. Let's make this the neckline. This is going to change everything. Now it's broken out and it's pulling back to the neckline. You see, you don't have to catch the first move. It can move away, and often it comes back to the breakout point and gives you a second chance. That second chance becomes your entry point. $105.70. We're there. We're almost there. 105.70 becomes the entry. This is still a good target. 106.65. But now it's 95 pips away. So you missed the breakout, and that's okay because it's coming back. Excuse me. You missed the breakout, and that's okay because it's coming back to the breakout point. It's coming back to 105.70. It's 95 pips to the ultimate target. Let's call that target 2. If target 2 is 95 pips, then in order for that to be 3-to-1, my stop would have to be at least 30 pips. I like this setup a lot better. If my stop is 30 pips, that puts my stop at 105.40, and that puts my stop under that shoulder. Actually, I'd like it just a little bit. I would love to get it under those wicks. Call it 105.39. Still 3-to-1. My stop is 31 pips. Right, stop. So entry is 105.70, stop is 105.39, target 2 is 106.65. Again, this is not a trade recommendation. This is just teaching you how to do a setup here. And if this first target is 1-to-1, let's think about it. If 70 minus 31, that first target, let's make that first target 30 pips. We'll put it right on 106. I don't want to put it past the round number. So let's go ahead and move that stop back to where it originally was so that it's perfect 1-for-1. Put the stop back where it was originally, 30 pip stop. Now we've got it. Entry 105.70, stop 105.40, target 1, 106 even, target 2, 106.65. We've got a 1-to-1 target, we've got a 3-to-1 target, slightly better than 3-to-1 actually. And that is a very nice setup for that 1-hour chart on Euro-US dollar. And it's what I would call a second chance entry. Looks like it came very close to the entry, but maybe came just shy of it, right? The entry point is 105.70. I see the low is 105.70 and 8. I missed it by 1 pip. So maybe that will come down again and give it another shot to get in. Okay. And as far as my pound dollar setup, looks like I'm up about 8 pips on that one, and just being patient here. Okay, gang, that's going to do it for me. Thank you for listening. My name's Ed Ponsi. Great to be here with you. I'll be back with you next week. And everybody have a great day. Thanks for listening. Take care.